Hello, everybody. Man, really hot up here in Connecticut today. Over 100 degrees with the heat index. So, anyway, I'd like to know where you all are. We literally have followers who are literally all over the world. So, anyway, I think it's pretty cool because I guess if I make you enough money one day, well, I won't make you money. I will teach you how to make money. But if that happens, I am coming to your, country, whether it's Australia or wherever, and to hang out. But anyway, all seriousness, or all, I should say, all kidding aside, I think this is a really good way to look for trading opportunities. All right. The market is made up of sectors, and the sectors are made up of industries, and the industries are made up of stocks. So this is what we would kind of call a top-down approach. If we can identify a sector that looks tradable, and in this case we're going to talk about financials because I think we're going to have a reversal, then you could kind of look at you could trade the sector ETF, no problem if that's what you do. Um, but it's like the what do they call them, the Russian dolls, where you open them and you keep getting a smaller thing. So here's our financial sector. Notice I say the word sector. I'm just going to put up the Bollinger Bands here. This is one of, I think, most efficient ways to look for things that are overbought. And this is showing us that this is really overbought. The Bollinger Band, at least for the default, okay, it's 2 standard deviations above the 20-day moving average. And if we get above that, why is that important? Well, 95% of trading should be within 2 standard deviations of the mean. So if we exceed that threshold, that's going to draw on the attention of a lot of these algorithmic programs that are based on statistics. Standard deviation is a statistical term. And as you can see, we are way above it. We're probably 3 or 4 standard deviations away from the mean. So at some point, we're going to reverse. Markets don't go in. I don't know where the financials are going to be in 6 months or a year. I don't claim to be that smart. My view is more short term. In the next week or two, there's going to be some serious trading ideas here in the financial sector. One thing you can look at is what is this FAS ETF, the direct sign. Notice today the financials are up 1.1%. That means FAS was probably down by about 3.3%. Yeah, you see? Well, 3.6%. Wow, look at that. So anyway, this is an inverse leveraged ETF. So I know it's going down, and I'm not saying buy it now. But if the financial sector reverses and you're not an options trader, this would be a good place to be. If you are an options trader, this would be a great place to be, assuming we're right. Okay. You're talking about buying options on a leveraged ETF. You can get a year's return in like 3 or 4 days. So what I want to do now is go to the financial sector ETF, the fact sheet, and look at the stocks, because by definition, think about it. A sector, like we just looked at the XLF, which tracks the financial sector, a sector is just the aggregate or the average of all the stocks that are within it. So by definition, some are going to move more, some are going to move less. So if we're thinking about maybe buying puts on something in the financial sector, let's just look through a couple of these names here. These are the top 10. They're not all of them. Berkshire Hathaway is 13% of this sector. And it's typically a pretty boring stock. I mean, everyone knows it's a great long-term holding. But the vast majority of our community here are short-term traders. Wow, look at that, man! Wow, this is just saying trade me, trade me, trade me. This stock does not usually act like this. This is usually a pretty conservative stock. So if we go back, I don't know, 2-3 years, the last time Berkshire was this overbought was when? Right here. And what happened? Big sell-off fall. So this is something to have on the radar screen if the financials reverse. Next up is JP Morgan. Let's see what that is doing. JPM. Overbought by not as much. All right, let's look at Visa and MasterCard. These guys are rocking because, probably because my wife contributes so much money to their friggin' bottom line and top line, but whatever. Okay, here's an interesting lesson here. Check this out. This is what we call the descending triangle. And forget the name. You know, a lot of technical analysis is kind of crazy. People don't get it. But if it's understood and viewed the right way, it makes sense. So, what does this show us, the descending triangle? Well, the buyers have been content to hang out here since April. And the sellers, the buyers are hanging out at the same price. They're patient. They're like, yeah, whatever, man. You come to me, I'll buy. If not, whatever. But at the same time, the sellers are getting more aggressive, which means they're willing to sell at a lower price. So we have a chart pattern that shows us aggressive sellers, complacent buyers. I don't care if you're trading, baseball cards, comic books, whatever. If you have people that really want to sell and people that are the buyers are like, yeah, whatever, it's going to set the stage for going down. And that's what happened here. Perfect textbook descending triangle. So now we've reversed, and what happened? We're back up to the level that was support. So this could be another trading idea too, just like Berkshire was. Like Berkshire's really overbought and overstretched. So there's a good chance it comes back in. This is kind of a different dynamic. I mean, it's overstretched, but it's run into a level that had previously been support. Levels that were support can become resistance. We could see that right here. People buy and they're like, oh, the market went up. I'm the new Steve Cohen. I'm great, blah, 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 blah. But then the market goes down and a lot of them are like, I made a mistake. I want to get out. But I'm only going to do it at break even. So if it gets back up to my level I bought at, I'm going to sell. So there tends to be resistance at former support levels. So this is another thing to put on the radar screen. And we're going to talk more about this all tomorrow morning. But that's kind of interesting. All right, let's go through MasterCard. I assume the chart's going to look kind of similar. Yeah, it does. But I mean, Visa, I think, is much more, I guess, enticing is the right word. Oh, wow. Look at this. Wow. Bank of America. Man, this is another thing to have on the radar screen here. Wow. Look how overstretched this guy is. Man, I'm telling you, everybody, there are going to be some ideas on the short side here. And when wow, I can't even believe that. Look at that. This stock does not trade like this typically. So when I say short side, I don't mean short the stocks. It's a generic term. I mean, most of our people here buy puts. Shorting a stock is such a risky thing because you could lose way more than you put in. But if you buy the options, that's the most you can lose. Look at this here. Wow, this is an interesting lesson. See how levels that were support can be support for a long time. But I think the other guys are more reversal-ish. All right, let's look at Goldman Sachs. The Goldman Sachs Group. Excuse me. People think Goldman is like people that work there are really pretentious douchebags. But I got to tell you, I traded with Goldman for 2 decades, and they were actually, the people at Goldman Sachs were actually some of the coolest, most down-to-earth people I ever met. You know where the real douchebags were? Were Morgan Stanley. That firm the people there are so arrogant. But anyway, that's neither here nor there. All right, so Goldman, potential reversal here. Look at Morgan Stanley. Let's go check that out. Because I know all you Morgan Stanley people are, yeah, whatever, dude. Hey, if we can make some money being on the short side of your stock, we're going to. And maybe you could take some lessons and stop being a douchebag. Sorry, man. I amuse myself. All right, American Express, pretty overbought. I don't know. I think the most tempting ideas that we've seen are Berkshire, the things we just talked about. All right, I don't even want to look at any of these anymore. Just want a quick look at Morgan. See, yeah, Morgan Stanley isn't that enticing. These other guys are like resistance, or they're overstretched or whatever. Visa. All right, thanks everyone. Check back in tomorrow because I think that there are going to be some serious low risk, high potential profit trading ideas here in the financial sector. And we're going to talk about this more tomorrow morning at 8 o'clock. So make sure you are there, and I will see you then. And have your questions lined up too. One thing that really annoys me is when people just type in a symbol. I'm not going to respond that to anymore. Because you know what? You type in X. I don't know. Are you a long-term trader? Are you a short-term trader? Are you a buy and hold investor? You need to say, hey, I'm this, I'm that. Here's my position. What do you think? And I would be happy to give it to you.